before we move on. Basically, as I said, auditors use management assertions with respect to their audit procedures, right? That's how they're going to do. They have to develop audit procedures to determine, does cash exist? Does accounts receivable exist? Did this transaction occur? Is the transaction that occurred recorded, right? They're going to develop audit procedures to test that. So if you have this audit procedure that says, the audit procedure that auditor would perform is review the accounts receivable with the credit manager to evaluate their collectability. So what, if you do this procedure, what will you know? What do you think you will know? You evaluate, review accounts receivable with the credit manager to evaluate collectability. Once you perform this procedure, what will you know? It's not a trick question. The answer is right in the question. Right in the procedure, sorry. What's the point of reviewing accounts receivable? Right, to determine if they're collectible. So, and why do you care about if they're collectible or not? Why does an auditor care? Yes, Jimmy. Well, you can have an outstanding. So if you have the deal with accounts receivable, right, is that it's accounts receivable. Somebody owes me money at year end. Why do I care as an auditor? It's right there in the procedure. Omar. Right. Right? Collectability. So part of the transaction or part of the objective with accounts receivable is not only to determine does it exist, but it's also to determine, will I collect on it? Will the client collect on it? No, I don't have a crystal ball. But we know, GAAP tells us, right, that you're not going to collect 100% of your receivables. There's a high probability that you probably won't. And you have to account for that. You have to account for the chance that you might not collect 100% of your receivables. That's why we establish an allowance for doubtful accounts. The auditor has to test that allowance for doubtful accounts. One way they do that is by reviewing the collectability of procedures, reviewing the collectability, of accounts receivable with the credit manager. So once you perform this procedure, what you will know is you will have some information as an auditor about the collectability of accounts receivable, about whether or not there are any customers who are late in payment, or whether what the credit manager believes are the collectability of those receivables. Are there any customers who are overdue? What's the status of those overdue accounts? So what assertion is being tested? So we're talking about accounts receivable. So what's the category of assertion? Account balance, right? Because we're talking about accounts receivable. Accounts receivable is a balance sheet account. So therefore, if we're talking about accounts receivable and account balances, what do you think the assertion is being tested? Yes. Dennis. Existence. Existence you would test not necessarily this, right? An occurrence deals with the transaction. Omar. Valuation and allocation, right? So before you get, before you get to this point, you're absolutely right. You want to have already tested existence, right? You want to know that account exists. So before you perform this procedure, you would have done something else to ensure that the accounts receivable existed. So here you're concerned about, because you're concerned about collectability, you're looking at the valuation of that account. So what will you know? You will know the amount of accounts receivable that are not collectible. You will know the balance that is needed for the allowance for doubtful accounts. And that way you're able to compute the net realizable value of accounts receivable, and the assertion being tested is valuation. You see the relationship between your audit procedures and how you what audit procedures you perform